Hey folks, welcome to the Rain Channel. I am Patrick Francie, your host. I'm also the CEO of the Real Estate Investment Network. Today I am joined by Natasha Phipps, one of our trusted partners and head of the Phipps Real Estate Group. And we're talking about what's going on in Alberta. It's a market update about the province, but as well as what's going on in Calgary, a little bit of what's happening in Edmonton. We're talking mortgages. We're talking about tenants and tenant profiles, the shift in demographic, and the actual trend to affordability continues in Alberta. We're starting to see what's happening in Edmonton. We're going to get into some of those details there. Before we get started, just a polite ask to like, to share, to subscribe to this channel, and to comment. Let us know what you like. Even let us know what you don't like. That's okay too. But give us some information about what it is that you don't like or what you loved about this particular episode. So again, subscribe, share, like. Thanks for listening in, and we'll get on with this show. Hey folks, welcome to the Rain Channel. I am joined today by Natasha Phipps of Phipps Real Estate Group out of Calgary. Natasha, you're a trusted partner of the Real Estate Investment Network. You've worked with us for many years, and welcome to the show.
Thanks for having me. Always excited to be here.
Now, we got a couple things that we just need to talk about, and we're going to get to all of them. But, let's kick off by saying, as we get into the fall and into September, what are you thinking about? Or are you anticipating any kind of pickup in the market, listings? And I want to ask you what your forecast is for mortgage rate, but we can do that a little bit in a minute. Tell me what's going on in Calgary, Alberta overall. What are you seeing, and what do you think is going to happen as we get into the fall?
Yeah, I am seeing, and this is already starting, and I kind of hope this would happen, where summer's always interesting for investors. I feel like we all kind of sit back a little bit and take a moment, which is important. And the Calgary market as a whole, like we are so low on inventory. So it is a serious problem if you're trying to acquire. But there is these investors who have had properties for 5, 10 years here in Calgary who are now thinking of exiting. So I do think into the fall, we're going to see investors bringing listings to the market that they have maybe wanted to unload previously and couldn't, and now the market makes sense, which could mean for future investors that there hopefully is some more listings coming to the market that they can take advantage of for sure.
Yeah, and so as we get into this, so what I want to shine a light on is that we are collectively doing a live event in Calgary on October 4th. I'll put the link in the description. And really, the concept about that is, from my perspective, is we're going to be talking a lot about passive and active investing. Active investing, buying kind of sticks mortar, getting it rented out, doing all the things we do as active investors, maybe doing a fix and flip or a burr or whatever that might be. And then into the passive side of it, where we're possibly doing a REIT or a trust, which is kind of your area of expertise, given that you've launched Wealth Share, which is a trust. You're going to give us a little bit of an update on that, because we're going to talk about that amongst many other things on October 4th at the event.
Yeah, I'm really excited for this event. First of all, it is coined Wealth Workshop. And I think now more than ever, we keep saying this, but it still seems like more than ever, it's important to be looking how to diversify your portfolio, have a well-rounded portfolio. And in times of uncertainty, like, it's a really good time to step back and take a moment to actually do that. So the Wealth Workshop, that's what we're going to talk about. We're going to talk about active real estate strategies here in Alberta, Calgary, and Edmonton. And also how to pair that with planning and passive investments, as well as, of course, your forecast on Alberta. And I think it's going to be a really, really great event for people to kind of take some action into the fall.
Yeah, so Rain community, make sure that you register, get out there, bring a friend. It's open to you bringing some friends with you. We want to get lots of people out, an opportunity to network, have conversations about real estate. I am definitely going to be there and be giving a kind of an open or an overall market update about Alberta. And I'll get into the minutia of Calgary, Edmonton, wander over a little bit, probably to Lethbridge, Medicine Hat, and all of those things that I like to do, and get into it. And we'll be really ready for that particular event. By then, we'll know a lot more of what's going on. So let's talk about, quickly what your view, and listen, it's just an opinion. I have an opinion. You have an opinion, perhaps. Mortgage rates, what are they going to do?
Yeah, it's so challenging. I mean, we talked about it previously in the summer, and I feel about as hopeful as I did then. I mean, it's really uncomfortable right now. It's really difficult for people, and that is forcing people to make some difficult decisions. But unfortunately, I don't see a lot of change going to be happening rapidly here. I think we're going to have to continue to be used to this environment and kind of, not get stuck on where we were 3, 4 years ago with these rates. Like, this is what we have to deal with now. And that doesn't mean that real estate doesn't work anymore, but you may have to look at it a little bit differently.
Yeah, it's a good point. And of course, we don't know where rates are going. We can certainly almost guarantee that they're not going back to 1 or 2%. So they're going to come, who knows where they're going to land, 4.5, 5, who knows, 4%, maybe. That'd be really nice.
Yeah.
I just literally renewed a mortgage on a light industrial that I have. And oh, that hurt. And I ground them, and I want to throw my bank under the bus. I won't. So the best they would come in at on a 3 year is 8.75.
Wow.
And
Yeah.
I just went, are you kidding me right now? So I took a variable, 1 year variable, and I'm going to shop around and see what else I can do. So that's
Yeah.
my story. But 9.25, my payment, by the way, went up 50%,
Yeah.
and that
Painful.
hurts.
It's very, very painful. And, interest rates are one thing. And then the bond market is a whole nother thing when we are looking in the commercial or multifamily side of things. Like, you look at the 10-year chart of bond rates, and the last 12 months have truly been a roller coaster. Like, there is
Yeah.
no way to predict what is happening there. And it's, every single day it's a roller coaster, which is super challenging for the investors in the multifamily space as well.
Well, let's just talk about something here for a second, Natasha. It's not a path that we've gone down before per se, but you've been doing real estate, Phipps Real Estate Group. You guys have been doing investor focused real estate for many, many years. You've been playing the game. You've got a great team. And, that's obvious in the fact that you do so many deals in that investment space.
Mhm.
When you look at what's going on right now, let's just talk philosophically for a minute. You look at the uncertainty, certainly the divisiveness, the polarity. There's so much negative, I guess, I don't know, banter and conversation. And gosh, you can't go anywhere where, the place is burning down. It's a climate crisis in Russia and Ukraine and, Europe and Germany. And it's like, I have to like tune out. Like, I literally have to step away from my screen because it bums me out.
Mhm.
But I know that, and I have my own view of it, but when you think about and you're talking to your investors, what are you seeing? What is philosophically, what's your view of the world when it comes to investing in real estate? I know you're a proponent of it, but I don't know, how do you square that?
Yeah. Um, Two things that I like to kind of bring up. One specifically for Alberta is all of this uncertainty is driving more and more people to Alberta. um, I talk to a lot of people from Ontario every single day, and I really hear the same things, and they're looking for things that Alberta has to offer. So I think for the Alberta real estate market, like, that is really, really, really promising and exciting to see. But also, what I like to tell people too is, I go, what about rates? What about all of these things that you just mentioned? And what that does is creates more tenants, and people are more hesitant to become homeowners. And
Mm,
particularly now, the younger generation, I mean, they're taking longer and longer to buy. And so the demand for rental housing is not going to go down. Like, so
mhm.
when you combine all of that together, specifically for Alberta, like, it is a good horizon to be looking at, in my opinion. So that's what I like to remind people about. And then also, the third thing, I guess, is always having a long-term outlook. Like, we cannot just be buying real estate and be focused solely on the next 12 months. Like, ideally, you're having that 5, 10 year outlook. Is it likely in 10 years you're going to regret buying real estate today? Probably not.
Mhm.
So, keeping that in mind too.
Well, it is that, classic cliche of, buy real estate and wait, don't buy real estate, buy, what is it? No, I've lost it now. Buy real estate and wait. What is it? Yeah.
Yeah. Don't wait to buy real estate. Buy
Yeah.
real estate. Yeah. You got me screwed up there.
Holy brain fart. So, okay, so that's really great. Now, when we look at Alberta overall in the market, and something you and I were talking a little bit off air on, is that you're seeing some opportunities and working with a builder potentially in Edmonton. And what we've discovered over the many, many years as we followed the kind of trends, if you will, Edmonton historically will follow what's happening in Calgary. And as we've seen Calgary real estate prices go higher, rents go much higher, deals being done, we're starting to now see a little bit, really, really early, some green shoots, if you will, of Edmonton starting to catch up. Now, you've maybe got a potential with a builder out there that you're working on a deal that you're going to be hopefully announcing maybe by October 4th. That would be kind of cool.
Yeah, that would be very cool.
But
Yeah,
tell us a little bit about Edmonton. What are you seeing?
yeah. So to your point, I mean, we as Phipps Real Estate Group, we always want to try to be ahead of what is going on.
Mm,
And what Edmonton feels like now and the opportunities I'm seeing in the numbers and is very reminiscent of where we were at here, 2, 3 years ago in terms of what you can buy, how far your dollar goes. And as prices rise in Calgary, as rents rise in Calgary, there's going to just be this trickle effect naturally. It will happen because people won't be able to afford to be here anymore, and
mm,
things will start trickling out, and that could mean to the Lethbridges and Red Deers and Edmonton and that. So I think there is good opportunity in Edmonton for sure. The price point compared to Calgary is a significant difference.
mm.
So if you're an investor, the first thing we do is talk about what is your budget? How much are we looking to invest and finding the best place to put that? And now I'm sort of preparing to be able to put Edmonton into that conversation for our clients here in Calgary as well. Again, diversification, it does not hurt to be in more than one area. Absolutely.
There's something that has to be considered as well. We talk about, the tenants are coming into the province, renters, because they're, and that's tendency, of course, what people do is they have to rent when they get into any kind of region. We start to see Alberta pick up overall as a province. We start to see people migrate into that affordability, which makes Edmonton part of that. Of course, there's great jobs there. There's another part of which we don't want to step over, and that is that investors getting mortgages is a little bit more challenging. Often we're seeing banks ask for 25% down. It's not getting easier to be an investor. But here is the thing that I want to just share is that as an investor, when we rise above, when we actually do the work to get it done, then we are being that rental housing provider. And there's something that has definitely shifted. And I'm hearing this story a lot, Natasha. I'd like you to maybe comment on it. And that is the tenant profiles changing. The tenant or the demographic, if you will, it's not. I mean, these are lots of times higher income families that don't qualify for whatever reasons they are. I mean, you got to stress test, whatever it is, 8.5% in some cases. They don't have the money for a down payment because prices have gone up. So you're getting a higher income family that are looking to rent a property. So that means that you can actually invest in a really nice property, put some capital into it, have it updated, do all the bells and whistles, and really attract that higher income. Now, I'm saying that just based on what I'm hearing, but your boots on the ground, are you seeing that as well?
Totally agree. The quality of tenants that we're seeing coming through now, obviously, we're a big proponent of buying good properties in good areas to begin with,
Mhm.
but more than ever, the applications that are coming through, I entirely agree with you. Really good jobs, families just looking to find a place to call home for a while, right? And they are not buying for whatever reason that might be. Oftentimes, though, if you're new to the province or new to the area, you kind of want to, get settled and see where you want to land as well. But I agree with you. We are seeing really good quality tenants. Absolutely.
There's something I'm going to comment on this, and then you can take it what you see. And I kind of have an idea what you're looking at. But we talk about oil and gas, and there's still lots of story out there that Alberta is a cyclical province, and it's up and down based on what's happening with oil prices. Right now, oil prices are up.
Yeah.
It's interesting. JG, for those who watch the show, him and I have done these shows many times where I'm saying oil's going up this back half of 2023, and so far I'm seeing that trend. I've been right. Now it's nice to say I was right. I had that thesis and I kind of forecast that back when oil was significantly lower several months back. We're starting to see it trend up. Now, having said all of that, I'm also, as I'm doing my research, looking what's happening in China, Russia, Ukraine, again, those kind of global macro, there is a risk that oil will come back down. Now,
Mhm.
having said that, as I'm creating a thesis around that, there's a strong argument for that possibility. What's your thoughts in terms of when somebody says to you, yeah, Alberta's just cyclical, because I know you have lots of out of province investors coming in to your region, reaching out to you. How are you responding these days to that particular comment?
I get asked that a lot, and it is a large topic of conversation, particularly people new to Alberta, whether they're looking to invest here. It's usually the first concern that they have. And what I like to bring up is number one, if you could rewind a couple of years ago when Calgary really started to gain momentum, that wasn't driven by the oil sector. That was driven by diversification and the tech sector and a lot of other companies investing in Calgary and wanting to call Calgary home. Now, the energy sector is not going anywhere. Like, don't get me wrong, it is a major, major component of what we do here.
Mhm.
But now more than ever, at least I feel comfort in that we are a lot more diversified than we ever have been.
Mhm.
And that's the best we can do is to continue to diversify, grow these other sectors to our economy. But yes, I mean, the oil and gas sector is not going anywhere, but what's driving people to Alberta more than ever, like even the applications we see coming in, very rarely right now am I actually seeing someone moving here for the oil and gas sector. It's all kinds of other things. So that is really interesting too. It's a lot of doctors and lawyers and professionals and vets and teachers and mechanics and all kinds of tradespeople and professionals
Mhm.
that are moving here. So that is a really good indicator of like a strong, healthy job market.
Yeah, for sure.
Yeah.
I want to, and it's interesting. So I agree with all of that. By the way, I'm seeing those same tendencies, and that's why I look at Alberta as a province,
Yeah.
Calgary, Edmonton, like you say, Lethbridge. To a lesser degree, I'm still always cautious about something like Grand Prairie, for example. But the point is this: is there's great opportunities, and back to the investment. If we sit on the sidelines because we're worried about a market crashing, then we're never going to get in the game. There's a fundamental through all of this is that real estate cycles, they're up, they're down, economies are up, they're down. Here's the key: buy a piece of property that cash flows, that you've taken some time to stress test it yourself. If rents were to back off at some point for some unknown, I guess, black swan event, that of
Yeah.
course, right now, it doesn't look like any of that's happening. The federal government's not pushing, they're not slowing down on immigration. We know that demand is going to increase. The economy, even though if it gets softer, is not going to be an all out crash. So there's a lot of things that saying get in the game. Always buy for cash flow if you're in that buy and hold game is something. And here's an acid test that I have often that I've taught over the years, Natasha, and I want to share it with viewers today. And that is this: when you buy that piece of real estate and you buy it for price, be very, very cautious. Why is it lower? Well, it's next door to a Shell service station, and it's where that 5 o'clock in the morning they pick up the garbage can. You get the backup beepers and the crashing of the garbage can. We've all seen those properties before, and they are generally less expensive to buy as an investment. And in markets like this, though, they rent out, and they rent out really, really easy. And because there's so much demand, the question you always ask yourself with that piece of property is, if the market slows down and there's 5 other properties like mine in this general neighborhood, where am I going to be on the list of choice by a tenant to rent? And are they going to be renting from me because my prices are lower because nobody else will rent for me, or is they going to be the first choice and they're willing to pay a premium? It's just a little bit of a kind of back check, if you will, in terms of what you buy for a piece of real estate, because it looks cheaper but it backs on to a service station, a freeway, whatever. Just always be very aware that you got to ask yourself, in markets like this, we're all geniuses because rents are high. When markets get soft, will that property be the top of the list of potential rents if that's where you're in that neighborhood? Anyways, I just wanted to put that out there. Natasha, October 4th, we are going to be talking about a lot of things, and not the least of which is both passive and active investing. Hopefully, you're going to have that deal or some deal locked down for Edmonton specifically.
Yeah.
Anything you want to finish up on? Any last things you want to say before we sign off?
No, I just loved your last point there. I couldn't agree with you more. Buying good properties in good areas, they'll always be desirable, right? It also reminds me of your rant you did once on micro suites and how those are only desirable at a very specific point in time in a cycle. But yeah, could not agree with you more. I'm really excited for the October 4th event and to have you here in Calgary. And yeah, can't wait to see everybody there.
Natasha, as always, thanks very much.
Thank you.